A flickering red warning sign on a dark background. Fast cuts of silver price charts jumping from $80 to $94, followed by a sudden red drop. Look at your screen right now. Silver has just touched 94.03 per ounce. It's the highest we've seen in decades. The mainstream media is celebrating. The gold-silver ratio is collapsing. Every TikTok expert is telling you to sell your house and buy silver because 150 is guaranteed by next week. But here is the truth that they don't want you to see. 94 is a giant trap. Visual. Zoom into the resistance line at $94 on a technical chart. We are seeing a massive vertical squeeze. But this isn't organic. This is a setup. While retail investors are FOMOing, fear of missing out, into the market at record highs, the big bullion banks and the insiders are quietly setting up the largest short trap in financial history. Why? Because on February 1st, 2026, less than 2 weeks from today, Trump's 10% Greenland tariffs go live. And if you think that's just a political game, you are missing the logistical nightmare that is about to break the physical silver market in half. Today is Monday, January 19th, 2026. As U.S. markets are closed for the MLK holiday, we are seeing thin liquidity spikes. This is exactly when they push the price up to lure you in. I've been tracking the LBMA vaults in London. They are nearly drained. China has already shut down refined silver exports as of January 1st to protect their own EV and solar industries. So, if there is no silver in London and no silver coming from China, why is the price stalling at $94 instead of mooning to $200? The answer is simple: liquidity harvesting. The banks need you to buy the breakout so they can dump their paper positions on your head before the Greenland crash happens. In this video, I am going to show you the internal data that proves a 10% correction is being engineered as we speak. We are going to look at the Roach Motel effect, the China export ban, and why the next 48 hours will determine if you stay wealthy or lose everything in this setup. Text on screen: they want you to buy the crash. Don't be a victim of the $94 fakeout. This is Deep Insight's money, and today we are exposing the kill zone. A split screen. Left side, news footage of Chinese factories. Right side, a map of Greenland with the US flag. In the middle, a silver bar being squeezed from both sides. To understand why $94 is a trap, you have to look at the two biggest players in the room, China and Donald Trump. On January 1st, 2026, China, the world's largest refiner of silver, did something unprecedented. They implemented a strict export licensing system. Effectively, they have shut the door on refined silver leaving their borders. They are no longer willing to trade their physical wealth for your paper dollars. Why? Because China knows that in 2026, silver is the new oil for EVs, AI data centers, and the solar revolution. +1. But here is where the trap gets interesting. While China is locking their doors, President Trump is building a wall. On Saturday, January 18th, Trump announced a 10% tariff starting February 1st on 8 NATO allies, including the UK, where the LBMA is located. He has given them a deadline: sell us Greenland or pay the price. And if they don't comply by June 1st, that tariff jumps to 25%. Pause 1 close-up of a technical chart showing a fake out at $94. Arrows showing a predicted drop to $84. Now ask yourself, why would the price hit $94 right now, just before these tariffs kick in? It's called liquidity harvesting. The big banks know that once these tariffs go live, the cost of moving silver from London to New York will explode. They are pumping the price to $94 to entice you, the retail investor, to buy their paper silver, ETFs and futures. They want to unload their risk onto you before the logistics snap. If you buy at $94, you're buying the top of a geopolitical bluff. The insiders are preparing for a bifurcation. This means the paper price you see on your phone might crash back to $80 or $84 once the initial hype fades, while the physical price, the actual silver bar in your hand, will have a massive 30–40% premium. They want you to buy the paper so they can keep the physical. It's a classic Roach Motel scenario. The paper price checks in at $94, but it can't check out when the liquidity dries up. This is the short squeeze that went vertical, but for the wrong reasons. It's not a squeeze of shorts, it's a squeeze of physical supply. If you're holding paper, you're holding a promise that can't be fulfilled. If you're holding physical, you're reholding the only thing that will matter when the Greenland standoff turns into a full-blown trade war. A digital clock ticking down to February 1st, 2026. Footage of high-tech vaults and traders looking stressed on phones. This is where the trap snaps shut. While you were watching the ticker hit $94, something strange was happening behind the scenes. On January 15th, just days ago, the COMEX raised margin requirements for silver by 47% in a single week. Think about that. They didn't just nudge the door, they slammed it. Why? Because the bullion banks are trapped. Chart showing silver margins jumping from $22,000 to $32,500. When they raise margins, they force the small traders out. It is a kill switch designed to stop the price from mooning too fast before the banks can cover their short positions. They need the price to drop from $94 so they can buy back the silver they promised to deliver, silver they don't actually have. A comparison of London, LBMA, versus New York, COMEX, inventory levels. And here is the deep insight for today. The LBMA in London is officially screaming for help. In 2025, over 100 million ounces of silver were moved from London to US vaults because traders were scared of these exact Trump tariffs. London is now running on fumes. Usually, when London runs dry, they just ship metal from New York. But with a 10% tariff starting February 1st, that location swap is now dead. New York silver is effectively locked inside the US. It's a resource fortress. This is why $107 is the next logical target. Once the market realizes that the paper silver in London cannot be settled with physical silver from New York due to the tariff wall, the system will break. We are moving toward a systemic decoupling. Text overlay. The Great Divorce of 2026. In Shanghai, silver is already trading at an $8 to $10 premium over the New York price. In Tokyo, we've seen spikes as high as $130 in the physical market. The paper price of $94 is a fake signal, a manipulated benchmark. The real value of your silver is already in the triple digits, but they want you to sell your bars at $94 before the 25% tariff in June makes it impossible for them to ever buy it back from you. Your strategy. How to survive the setup. 15-20 Dow. Visual, host back on camera, looking calm and authoritative. Stacks of physical silver coins and bars on the table. Narrator. So, if $94 is a trap, what should you do? Step 1. Ignore the paper. Panic. When you see the price dip from 94 to 85 or even 80s in the next few days, don't panic sell. That is the flush out. The banks are trying to trigger your stop-loss orders so they can grab your silver for cheap before the February 1st deadline. Step 2. Watch the premium, not the spot. If the screen says $80 but your local dealer is asking $110, believe the dealer. The dealer represents the physical truth. The screen represents a paper lie. Step 3. Geographic sovereignty. If your silver is in a pooled account or an unallocated vault in London, get it out. Now, once those tariffs hit, your paper promise in a UK vault will be worth 25% less the moment you try to bring it to America. Closing montage of a rising sun over a silver mine and a Deep Insights Money logo. The Greenland Tariff isn't just a trade war, it's the end of the global unified silver market. We are entering the era of regional silver sovereignty. Stay focused, stay physical, and most importantly, don't let them talk you out of your position at $94 when the real race to $175 is just beginning. I'm monitoring the COMEX delivery data every hour. If you want to know the second the Roach Motel traps the next big bank, hit that subscribe button and join the Deep Insights Money family. What's your move? Are you buying the dip or holding through the trap? Let me know in the comments below. I'll see you in the next emergency update.